Hey everyone, I will be going over Enphase energy today. The reason I'm doing this is because I did Solar Edge a few weeks ago. That video did really, really good. And Enphase is essentially their, I don't want to say one of their equivalents, but they're a competitor. And basically, I just want to compare them. I know for a fact Enphase is a lot more financially stable, but also Solar Edge has a lot more potential upside, just in terms of where the stock price is. But so make sure to subscribe. Let's just get right into it. So let's just hop right into it here. Cost of capital looks decent. Target price is at 97, which is again, so along with Solar Edge, you could see from the smaller chart here, they were all the way up over almost at $300, actually above 300 at one point, and they are at 59 now. So they have also been suffering fairly recently, but the target price is way up there. Long-term growth rate is 22%, which is really good. Let's head over to the income statement and see what's going on here. So allegedly, they're expecting a very large drop in sales over the past year, which is not great. Not exactly something you want to see there. Operating income is going to basically evaporate from nothing. They were seeing consistent growth, and now it is gone. Still positive, which is okay, I guess, but gone. Um, Down to 30 million from 461, which is crazy. Net income is going to see the exact same thing, which is not not too good. Now again, these are still LTM. I don't remember what that stands for, but essentially this data is not complete yet. It's just estimates of what will most likely happen. But yeah, so still not good there. EPS, basically the same story, consistent growth, but then a huge drop over this past year. Maybe total shares will see something we like. And I mean, honestly, kind of yes. Well, not compared to where it was 10 years ago. That's 10 years ago. But over the past 4 years, we've seen stability. It actually dropped in the past 2 years, which is something unexpected. Up from 2020, though, up from 2019. So nothing too crazy there. I'm actually probably going to do the zero point 0.5 just because you would expect with an industry like solar power to be practically cash flowing themselves with share dilution, but they're not, which is good. Let's look at the balance sheet. So again, income statement there, not great. Assets are looking good. Cash compared to their short term is fantastic. Great there. Assets are good. Short term debt is good. Long term, even, is coverable by their cash, which is not really expected, but very welcome, of course. Maybe some positive retained earnings. And yes, there are. And actually, positive retained earnings for the first time in their history in the past 2 years, which is great, especially for a solar company, and especially considering there's an estimate of some pain coming soon. Hopefully, it continues with some retained earnings, though, but I kind of doubt it. So a clean sweep for the balance sheet, which is a little surprising there. Cash flow operating looks decent. Actually declined for the past 2 years, which is not great. Negative investing, negative financing for the past 3 years is interesting. Just other uses, changing capital stock. So repurchasing stock is awesome. I mean, that is definitely something you want to see. So I do like that. And 3 years straight of negative financing cash flow. And then free cash flow is positive, up from 3 years ago at least. Really can't complain there, honestly. I'm more looking for stability in the free cash flow section. So even though it did take a dip from 2 prior years, it's still fairly decently positive. So let's look at the use of cash. So seeing some big share repurchases, some debt servicing. That's nothing in 2022 though, which is strange. But so for the issuance, I mean, they have been issuing more than they're repaying, which is not great. In the past 2 years, though, they haven't issued any new debt, which could be a positive sign. Um, for their equities, they have been repaying much more than they're issuing, which is really nice. Especially in the past year, only issuing 13, repaying 410. That's awesome. So I like that. Let's look at the ratios. Hopefully, we're going to see some SGA improvements. SGA to sales. So actually, not really. It's actually been increasing fairly consistently, other than much earlier. But again, back at 25% after not being there since 2018. So that's not really that great. Not liking that. Net margin has been increasing, which is honestly shocking. I mean, it was higher in 2019, but even still, it's been increasing for 3 years, which is good. ROA, ROE, really solid numbers here. Can't complain with any of that. And debt to equity should be decreasing, which it is. Now, it is very high. In 2020, they had almost no debt, but fairly shaky start to their company. But it has been decreasing for 3 years straight, and it's almost below 100. It most likely will be within a year or two, I'd imagine. Probably 2 years it'll be below. But it's estimated here, the 5-year average is 110, hoping to see that below 100 soon. If you were watching the Alibaba episode that I just recorded, you would see that was at, I don't actually remember. It was lower. Basically, it was lower. Disney, I believe, was at 45%, and they're a fairly mature company. But considering this is a sort of newer, high growth solar company, not a terrible number there. So overall for Enphase, we've got 15.5 out of 5, or 15.5 out of 23, 64.5 final score. Compared to SolarEdge, which got a 25.5, that's honestly really good. What did I just say? 64.5, 64.5 there. So again, really solid. I mean, can't really complain with that. It's basically middle of the pack, a little bit better than Dollar General, just under where Tesla and Alibaba were. So way better than SolarEdge in terms of financials. So yeah, that's about it. Hope you enjoyed. Make sure to subscribe, and I will see you in the next one.